Good morning, traders. It is Tuesday, January 14th. We are pre-open. I wanted to show you a really nice search to find earnings trades. Earnings season's coming up. We're going to have a ton of great earnings plays. You don't have a lot of time to find these. I understand. I don't either. That's why I made it so simple. Here's what we're going to do. We're going to click on Scanner and Option Stalker. We're going to go down to Buy into Earnings. Whoa. That's a lot of stocks. Yes, it is. All of these companies announce earnings in the next 2 weeks, and we know that 75% of the time or more over the course of the last 12 quarters, these stocks tend to rally into earnings. That is a huge statistical advantage that we're going to capitalize on. So, a lot of stocks to sort through. We have ways of filtering them out. These are buy signals from the one option system on a 1 hour basis, 2 hour basis, daily basis. So we can filter. Show me stocks that are only on a 1 hour buy signal. Show me stocks that are on a 1 hour and 2 hour buy signal. Whoa, all of a sudden our list is dramatically smaller. And I'll tell you what, out of the stocks that I've looked for, I know that there are 3 in here very, very easily. How long do you think it'll take you to flip through these charts? Not very long. Let's do it. And I'll show you ones that I like and ones that I don't like. CSX, really nice on a day trading basis. Look at it, try and break out through this upper horizontal resistance. Hover over the E, there's my earnings date, 1/16/2020. Super easy. Every time you're looking at a chart, you know when the earnings are coming up. FCX, another one. I don't like either one of these, and I'll tell you why. Right now, the market is getting a little bit pricey. It's at the upper end of its valuation range. It's also at the upper end of the trading range. I don't want to be selling these bullish put spreads on stocks that are about to announce when they could easily pull back a little bit. I'd rather have something in here in the middle of the range where I've got strong, concrete support and the chance for the stock to move higher as it normally does. A stock like this, I would feel, is fairly exhausted. It's run up an awful lot. This isn't the worst example because it is compressing here, and you've got a nice compression that you can lean on. That 1250 support level right there would be the one that I'd want to sell options below. But you can see here that it announces on 123, so we've got maybe one expiration that we can take advantage of there. That's another important thing, is I want to make sure that I have a weekly option available to me because I want these option spreads to expire before the earnings announcements. You do not hold these spreads over the actual number. So this is an example of one that I would not want to take advantage of because the stock is so hot, it's already running up. That opportunity is already gone. So we're going to keep clicking down the list to see what we like. Intel, not bad. I actually like it. Here you can see that there's a horizontal support level right at that 58.50 level, and the stock is still close to it, and the stock still has a little bit of room to go and challenge that high of 60.75. Yeah, I like this one. So you got your nice horizontal support level you can lean on. You have a little bit of a doji right in here and then a move higher. So yeah, not a bad candidate. We can go in and take a look at those options. And when does it announce? It announces on 123. So I'm going to click on trade options, and it's going to bring up our option chain, and we could see that January 24th is expiration. So this announces 1 day before that option expiration. So I'm not going to go with it. I want to make sure that we're past that option expiration date. But it would be a decent candidate. Juniper, let's put up that 100-day moving average, 200-day moving average. Let's see where the stock sits. So we know 75% of the time over the last 12 quarters that this stock likes to rally into earnings. You can see there's the last earnings announcement, the A. Oh yeah, well, at least the last one for sure it worked out. So we've got long tails under body here. We've got a nice upward sloping trend line. It's coming in right around this 24.50 level, which also happens to be that 100-day moving average. Let's take a look at the options. If we can sell a 24 put, that one I would be more comfortable with. So we're going to click trade options. It's going to load up the option chain, hover over. Okay, there we go, 127. So we've got an option expiration cycle that we can get in here. So we're going to go down and take a look, see what the 24 puts are trading for. A little slim in here. So you can see 11-cent bid. I'm going to click on the bid. That's how you, if you click on a bid, it assumes you're going to sell. If you click on an ask, it assumes you're going to buy. When I do both, it shows me the credit that I can get for it. Because this is a 50-cent credit, 50 cents between the strike prices, I want to get a dime for that. I can't quite get a dime for it. If the stock pulled back a tiny little bit, maybe I can get it and then I would like it. All right, if I could get 8 or 9 cents, I would also take that. This option expires in about a week and a half, so yeah, I like this one. I think Juniper could work out pretty well. You just need a tiny little pullback in the stock. Even 10 cents might get you that credit that you're looking for. Let's keep knocking through this list here. LVS, wouldn't want to do it. It's too hot. It has a chance to pull back after a big run like that. Morgan Stanley, same deal. RF, RF has already pulled back. Not sure why. It's right above that 100-day moving average. I would want to know why the stock sold off when the market's been moving higher. Let's overlay that SPY. You can see market up, 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 stock down. Not good. That's actually a very bearish sign. So I'd want to find out what the heck was going on in there. Again, doesn't take you very long to do any of this. We'll be done in about 5 minutes. Starbucks, you know I like it. I've liked it down here. I liked it up here. You had a beautiful opportunity to sell bullish put spreads all in here, leaning on that 200-day moving average. We did it, we did it, we did it a number of different times. Stock gaps up through this horizontal resistance and compresses right around that 100-day moving average. As soon as it pokes above it, we're selling puts right here. Beautiful. We've got another breakout through this horizontal resistance point, and that tail right there is at around $89, which is that horizontal support level. If the stock pulls back to that $89 level, yes, I would like selling bullish put spreads on it again. But it doesn't have a lot of premium because it doesn't move very fast, so you do have to have that pullback. Hover over the E. 123. Don't have an expiration date before that earnings announcement. This I like. I like this one a lot. Sorry about that. I don't know where these pop-ups come from, but in any case, I've got this nice upward sloping trend line here. I've got this 200-day moving average right here. I've got a option expiration after January 24th. So I have an extra option expiration cycle in here, and I can lean on this 100-day moving average, and the stock is trying to get through this horizontal resistance level. I like it all. Almost a little bit of a cup and handle here that you can see visually. This stock looks good. This is a pick that I would definitely go with. If I weren't doing all of this dialogue, I could have found this in 1 or 2 minutes. So you come home, you relax. Hey, I wonder if I can find a decent bullish put spread to put on for earnings season. You go through the routine. 2 minutes later, you're done. So let's get that option chain up and see what we can get for it. And so I'm going to click on trade options. And we'll look at that January 24th expiration date. Remember, the 27th is when it releases earnings. And I would like to sell it below that 148 price level. So let's see what those go for. And so we'd be looking at a 148 put. That's what we're looking to sell. We would be looking to buy the 147 puts. So there's $1 between those strike prices right there. I would want to get at least 15 cents for this. Well, off the screen I can see, and off of the bid-ask spread for the spread, I can see it's 11 cents bid, offered at 25. As soon as I identify a spread like this, Option Stalker is going to middle it, so I can easily adjust the price up or down. And I'm pretty close. So if I want to get 15 cents for this, I think I might be able to. And I think this is an excellent bullish put spread that you can put on today, January 14th. Watch this stock. It tends to be a little bit choppy. How do we know that? You can see the long tails under body in here. Okay, that means that the stock does move around. And we'll go into a 5-minute chart to see what the stock did yesterday. Yeah, gets a nice little run here, and then boom, right back down again. Nice little run, boom, down again. So you want to wait for one of these little dips. And it could have a dip right on the open this morning. It's not going to take much to get these options in there. Look at this. Nice sell-off and then a rally back. So it moves. The point here is wait for Whirlpool to pull back today. You're not going to need much of a pullback. I think if you can get down to maybe the $52 level, these options are going to spring to life. And you'll be easily able to get a 15-cent credit. You might even be able to get a 20-cent credit. I like a 20-cent credit even more. So in a week and a half, if you put up if you put up 80 cents, so the difference in the strike price is $1, you get a 20-cent credit. So $1 minus 20 cents is 80 cents. That's your margin requirement. That's your maximum risk on the trade. So if you divide 20 cents by 80 cents, that's a 25% return on investment in just a week and a half. This is a really nice trade. Well, why would I want to risk 80 cents to make 20 cents? It's all about probability, and you can see that the stock has upward momentum, which option pricing models don't take into account upward momentum. They just look at everything constant from the current price and look a standard deviation above, a standard deviation below, and then they figure out at this particular price, where should those options be priced. We're taking advantage of upward momentum. We're taking advantage of time decay. We're taking advantage of major horizontal support at this level and obvious support. Look at these two tails under body. The stock wants to go higher. So I like this bullish put spread. That's how easy it is. I've got a ton of other searches I can show you too that it takes like 2 minutes to find these opportunities. Earnings season is coming up. They're going to be great trades. I don't think the market's going to pull back. So the real way to make money right now is to find these stocks with really strong fundamentals, strong horizontal support that are going to be reporting earnings. We've got a statistical advantage. We know these stocks like to rally into the number. So we're going to use that to our advantage. And earnings season is so powerful because there's a price discovery process. You know that these companies are going to be announcing, but you don't know where the number is going to be. As soon as that number is released, the market is trying to adjust that price. So I love trading after earnings, and I'll show you another video over the coming weeks. I'll be doing 2 or 3 of these videos. Really great opportunity for traders. Thanks so much. I've got a free trial for Option Stalker. It's at the bottom of my homepage. You do need to have an account with Tradier Brokerage. If you do, all of the options are all of the option and stock trading is free. It's included in the trial and it's included in the price of Option Stalker. We also write into the IB Interactive Brokers API. So that's another way that you can get Option Stalker. Thanks so much for watching. I hope to have you aboard. See you a little bit later with my daily video. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.